Good afternoon, guys. It's Workin, bringing you a quick update on Bitcoin. Hope you guys are having a wonderful afternoon. We're looking at Bitcoin to the US dollar. This is the 4-hour chart on Coinbase. And last time we spoke, Bitcoin was sitting up in this zone here, guys, just consolidating, moving sideways. I told you guys it probably is not going to be able to last up here much longer. In other words, we were going to get a break. We had this little wick right here that came up, rejected very strongly by the bears, and again, more sideways movement, which I'm really actually surprised that it took this long for price to move. As I told you last time, guys, we had longs that were just stacked. We had shorts that were falling off the board. We had very low volume. I told you guys that that was a recipe for market makers to bring price right back down, and that's exactly what did happen, guys. Price just completely broke back down about what, four or 5 hours ago, somewhere thereabouts, guys. And we had this perfect Bart Simpson type pattern, guys. With this is just kind of a manipulation pattern here, a classic manipulation where you get price going straight up, basically moving sideways in a straight line and then straight back down to where it started. And that's exactly what we have, guys. This is just pure manipulation, a pure bull trap, as we warned about. And it's interesting that we found support right here on top of that's 3,800, just a little bit below. We have a lot of support between 3,800 and 3,600, but really price came back down and is sitting right around that $3,800 support. And that's a relevant zone because if we come over here and we go swing low, swing high right off of this area, as I showed you guys before, looking at this structure here, we had this perfect tip by a wick right here, right off that 618 fib level, right there by just a wick. So we're seeing a lot of structure in the market. Now, if I come over here and I look at this same microstructure, so this was our swing low, and I look at this overall, and in fact, it looks better on the daily. So let me bring up the daily so you can kind of see how this is its own independent microstructure. So we had, this is our swing high, coming back for our swing low, pivot low here, and then this being its own little structure right here. So in this area, guys, if I go swing low using this as my swing low, going up to my swing high right here, what do we have? Once again, guys, we had this perfect hit right off that 618 fib level, wicking just inside the golden pocket between that 618 and that 65, but right at that 618 fib level where we can see provides a lot of support and is providing a lot of support. So it's no coincidence it came back down here, guys. Now, this area, typically in a normal market, I would tell you this would be a good area to enter a very quick scalp trade targeting about 4,000, somewhere thereabouts. I'm not doing that in this market because the volume is still so low, and this was just obviously pure manipulation, guys. And because I know this is pure manipulation, I'm not going to be entering a trade. Now, doesn't mean that that you can't. And if you want to take a risk, you want to enter a trade, which any trade is a risk, guys. But this would be a pretty high risk trade. But still, nonetheless, it does make sense, and you can build a case to enter into a very small scalp trade here, targeting 39, 4,000, somewhere up here, guys. That certainly makes sense. This is a lot. There is a strong support area here. But if this support breaks down, if this 618 fib between the 618 and the 65, that golden pocket ends up breaking down, guys, I think it'll be a very quick drop down to at least 3,600, where we know 3,600 has provided a lot of support in the past, and there's just a lot of support between 38 and 3,600 anyway. Pardon me. But 3,600 should provide a lot of support, and if that does end up breaking down, that might not be a bad idea. Again, if you want to take a risk to enter a quick scalp trade there as well. In fact, laddering in your buys between 3,800 and 3,600 to a very small position is not a bad idea. Again, it's risky, but it's not a bad idea, and you can certainly make a case. But again, I'm not doing it because the volume is so low, guys, and I'm just not seeing, I'm not convinced that this thing isn't coming down much lower. Again, doesn't mean it's going to, it just means I'm going to wait and see. I'm stepping back and going to wait until I have a very strong entry that makes a lot of sense, and right now this just doesn't. Now, if we do end up breaking below 3,600, guys, as I told you on the last update, I do think it'll be a very quick drop to 34 to 3,250. And I mean decisively, not by a wick, but if we get a decisive break below 3,600, coming back to the 4-hour chart here, by decisive, I mean if we get a 4-hour candle, both opening and closing below that 3,600 area, I think it'll be a very quick drop down to 3,400, 34 to 3,250, this area right down here. So, and anytime, oftentimes, guys, when we see manipulation like this Bart Simpson pattern here, oftentimes what happens afterwards is either we get just more sideways movement or price does end up falling down. Now, again, doesn't mean that has to happen, guys. Just means that right now I'm not seeing a good entry point at all, especially if you're looking to go long. Looking at shorts, shorts obviously have been falling off the board since we had that massive drop in price. We have, well, massive, relatively speaking, about a 6% drop in price. We've had a little bit of an uptick in shorts, but obviously nothing too significant at all. Shorts remain very low, and overall seem to still be falling off the board, even though we had this little bit of an uptick here. Now, looking at longs, You would expect this, guys. We had this a lot of people hitting their getting their stop losses triggered when price dropped down like that. So we had this drop off in shorts, or excuse me, in long positions, but still overall longs remain stacked. And overall, even though we've had an uptick in volume here, volume at about 6.2 billion on the day, that's about a $1 billion daily volume uptick from yesterday. So it's not insignificant, guys. We do have that. Obviously, this is all selling, but still an uptick in volume from yesterday. But nonetheless, overall, that's a very, very low volume overall, guys. Remember, I want to see daily volume above $10 billion on a consistent basis to know that new money is entering into this market. And as of right now, even with that uptick in volume, guys, overall volume remains very, very low, still very, very ripe for manipulation. Longs remain stacked, shorts remain very low in relation to longs, and that's just a recipe for market makers to drive price back down. Now, again, it doesn't mean that's going to happen, but certainly it tells me that you should proceed with caution. And the best thing to do, guys, anytime you're uncertain like this, is to just sit back and wait and let the trade come to you, and do not force a trade. Now, the only thing that's slightly bullish that I am seeing in all this, and granted it is short-term bullish, but overall, guys, if we look at this since we had this pivot low down here, overall, this has been an uptrend. Okay, so if I come over here, this is on the 4-hour chart. So if I come over here and I look at my 4-hour indicators, look at our MACD, guys, and I look at this point to point, if we're looking at the downside, if we're looking at the bottom of the indicators here, guys, that's going to be hidden divergence if you're seeing some kind of divergence. And if we look at point to point here, let me kind of bring this up so you can see this a little bit better. If we look at point to point, from this point to this point, looking at just a wick, even as of now, we have just a slight incline. So in other words, from this point to this point, we have a slightly higher low in this overall uptrend here. We have a slightly higher low, if not just more sideways, but certainly not a lower low, obviously. Now, if I look at the histogram on the MACD from the same exact points, guys, what do I have? In fact, let me get to the same exact points here. From the same exact points, what do I have here, guys? We have a lower low. If I look again at the same exact points here on the 4-hour RSI, what do we have? We have a lower low. So that is in this overall uptrend. Looking at the bottom, that's hidden divergence. That's going to be hidden bullish divergence. Now, this does suggest, this is probably why we're finding some support here. This does suggest that that we might get a little bit of an uptick here, but this is only on the 4-hour chart. We're not seeing it on any other. We're not seeing it on the daily. You're not seeing it on the higher time frames. And so this may just be the support that we're seeing now for price to end up breaking back down. But that being said, guys, I wanted to point that out. It's not, take that with a grain of salt. One of the other things that I'm keeping an eye on here, if I come over here and I look at the daily RSI since since mid-September of last year, has had this resistance line here right at about 56.2 on the RSI. Now, we had a brief, very, very brief break above, which got immediately shot back down. But this is and we tried to break above here, got shot back down again. We can see we've tried to break above it multiple times. So what I'm going to be watching, obviously, we're well below that now. But just for future reference, I want you to kind of keep in the back of your mind this 56 level on the RSI, on the daily RSI. If we can break above that, guys, with some consolidation, not like this where we just come up and immediately get shot down, but if we can get some consolidation above that 56.2 RSI, that's gonna certainly get my attention, guys, and would be a bullish sign. Not anywhere near there yet, just something I want you to file in the back of your head for future reference. Looking at our moving averages and exponential moving averages, we can see, and Bollinger Bands, obviously this is on the 4-hour. We can see that the 4-hour Bollinger Bands here, we're just getting squeezed tighter and tighter. Anytime you see this, guys, and I think I pointed this out last time, but anytime you see the Bollinger Bands getting squeezed this tight, you know a larger move is coming. This was extremely predictable that a larger move was coming. Now, it didn't mean it was going to break down or necessarily bring up or down, but certainly indicated a break in one direction or another was coming here, and obviously price broke down. Now, looking at the daily, zooming out on the daily, we can see that price broke down, found support right on top of that 50-day moving average. As long as we stay above this 50-day moving average here, guys, I will have hope. Now, we did break below this 21-day EMA. Now, anytime you break below a 21-day EMA from having decisively been on top and you break down below, you run the risk of a momentum shift, and this may be. Now, this just because we have a daily candle that closes below this 21-day EMA, that's not going to be a decisive break in my book. A decisive break below Sorry about that, guys. A decisive break below the 21-day EMA would means a daily candle both opening and closing below the 21-day EMA. So even if we get this daily candle closing below the 21-day EMA here, guys, that's not a decisive break. I need a daily candle both opening and closing. Today's candle opened above the 21-day EMA. If it closes below, that'll be a bearish sign, but will not be a sign of a momentum shift, at least not in my book. Now, if tomorrow's candle also opens and then closes as well below the 21-day EMA, that's going to be typically that's going to be the sign of the momentum shift I'm talking about, and that's typically when you see a continuation to the downside. Now, that's just one thing to watch in the midst of many. Doesn't mean that has to happen. It just means that's another thing that I want you to keep an eye on. Now, again, this 50-day moving average is also significant, guys. Staying above that 50-day moving average obviously would be a very bullish sign, but breaking below that would obviously be a very bearish sign. Again, sounds very elementary, but just something I want you guys to keep an eye on. Without question, guys, these moving averages and exponential moving averages can really help you out, especially when used in combination with longs versus shorts, with overall volume, with support and resistance levels. Again, all things that you combine together to get an overall picture of what's going on in the market. Zooming out on the weekly chart, guys, and I'm gonna wrap things with this. Zooming out on the weekly, this really gives us a lot of perspective, guys. We felt like that price has been all over the place. Really though, when we look at this perspective here, we zoom way out and we look at the big picture. This going all the way back to May of 2017. This little uptick here started right here. Looking at the big picture, guys, this is just a blip on the radar. This overall downtrend. This may just be a small correction to continuation of the downside. We have not had any indication of a hard bottom. In other words, we haven't had a wick that just came down here and immediately shot back up like something like this that would indicate a strong reversal like we had right here. We have not had that down here yet, guys, and I've been telling you this all along. This does indicate that we may be coming down and retesting at least those lows, this 2018 lows, possibly even lower. Now, one of the things I'm going to be keeping an eye on is this $3,600 area. Now, I've pointed out before that support between $3,600 and $3,800, but that $3,600 support is key. If we can stay above that, guys, I'll have hope. If we decisively break below 3,600, obviously, guys, that's going to be a bearish sign. Zooming out on the weekly chart, we can see that 3,600 support was support all the way back here in August of 2017. With support again here, support again here, support again here. Price came back down, support again here. Almost a year later, support again here, support again here. Then briefly broke back down, came back above, support here, and let's see if it can maintain support here, or if it breaks down. If we do break below that 3,600, things could get bearish very quickly. As long as we stay above, I do think we may get some sideways movement, but it may just be that, just sideways movement, guys. But if we break below that, guys, there's a good chance it's going to come down much lower, and that may not be a bad sign, guys. It may be just what we need to come back down, retest that $3,000 level in order to get enough interest in the market and spark that nice bounce that we need to take us on that nice little bull run. Again, just something to keep an eye on, guys. Not saying that's going to happen, just saying something to keep an eye on. Certainly, if we break above into this zone here, between 4,300, 4,500, somewhere into this area, if we can consolidate into this zone here, not even break above, but just get into this zone above 4,300, that would also be a very bullish sign, guys. So these are the things that I'm watching. So I want to make sure you have an idea of not just the micro level, but the macro level as well. So I'm going to go ahead and wrap things there, guys. If you have any comments, questions, suggestions, please leave them in the comment section below. As always, would appreciate an upvote if you have enjoyed this content. Until next time, guys, please trade safe. Take care of yourself. This is Workin. Signing out.